Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the shakeup at Disney, more retail earnings this week, and how to do a qualified charitable distribution. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Disney's board of directors reinstated Bob Iger as CEO less than 3 years after he was replaced by Bob Chapek. What does this mean for Disney stock?
Hey, good morning, everybody, and thanks for that intro, Allison. It's Thanksgiving week, and it's good to have Allison home for the week. It's an interesting move that Disney's board of directors made this weekend, where they reinstated Bob Iger as the CEO. Less than 3 years after putting Bob Chapek in. So I think it's a bold move. Obviously, the market is celebrating it, but really, what is Disney trying to do here? Well, it's just new leadership. Obviously, Disney's down like 40-50% on the year. The shares are popping 10% on this news. Really kind of, I think it's going to show a change in leadership style. And I think the most similar it would be to what's going on in Twitter. Elon Musk bought Twitter and he kind of shook up the place pretty good. Carrying the sink in and firing a lot of the people that were there, and then reinstating some of them that he realized that he probably shouldn't have fired. But more of a culture shock, if you will. I think if you've seen the trend at Disney, if I'm allowed to use the word woke, Disney has become increasingly more woke over the years. I think that's kind of turned some folks off. So I would expect that by Starbucks did this with Howard Schultz when they reinstated him. Is when you see companies, Apple, Steve Jobs, when you see companies go back and reinstate a former CEO, generally you're looking at a culture change. Culture changes do not happen overnight. Probably the fastest I've ever seen is what's going on at Twitter, because Elon Musk is obviously going in there and basically torching the place, if you will, to try to change the culture. So I don't think Bob Iger will do that as aggressively, but I do think that he'll start some changes and put the company on a better path. But the question becomes, what do you do with the stock? I do have some Disney stock in the book, so I'm not against Disney. Disney's got multiple ways to win. If you look at a 1-year chart here, they own. They have the parks, we have the retail, they have the movies, they have ESPN, which is not a way to win. It's a traditional money loser. But you can see, the stock's been beaten up even with the 10% pop this morning, 40% down on the year. They have done away with the dividend, so you don't get any dividend now after having years of dividends. From a PE ratio basis, still kind of expensive. So really, it's a Dow 30 component. So it's one of the big blue chips that are out there. A lot of folks like to invest in Disney for their kids just because it's something that they recognize, right? They can resonate with it. It's real, if you will. But yeah, I wouldn't rush to hop into adding more necessarily here. I think it's going to take a long time. So really, you have to be more in tune with what's going on with the Fed and interest rates and inflation and the war across in Europe. Those things are going to play more and move the overall market more than necessarily a CEO change at Disney. So I think you're okay waiting here for a better price.
Next, more retail earnings are on the way this week as retailers prepare for Black Friday. What's your take on retail stocks going into the holiday season?
Well, the retailers are in a tough place, right? So it is the holiday week. It is the Black Friday's coming up, and that's a good time for retailers to reposition because they can move a lot of inventory, and really replace that inventory with the latest and greatest that's out there. But what we've seen kind of from the Walmart earnings that we've had is, the as far as the either recession we're in, which we found, okay, we're not actually in a recession after all. You can argue that to the end of time, or with the recession coming, who is slowing their spending, right? The luxury folks are not slowing any spending. So that's the point of this article, is don't be in the middle, right? So they're using like Lululemon and Restoration Hardware as kind of the upper end luxury stuff. The spending's been the same at the Walmart, the Dollar Trees, Dollar General. All of that's been the same. It's the people in the middle that are kind of stuck. The Target that you can buy the same things that you can get at Walmart. You just have to pay 10 cents more per item, or something like that. That's not an exact number, but you're paying up for the experience. Same thing for Costco with the memberships. You have to buy in bulk, so you think you're saving, but actually, I mean, you're spending a lot, kind of a lot more, because you're saving so much, right? So, but when the folks that are out there that are cutting back are the middle class for the potential recession that's coming up, tightening their belts, if you will. So it's kind of this could go either way, really. Generally the fourth quarter, the quarter that we're in, is a huge boon for retailers. When you look at the 6 tickers listed here on the left, I mean, Walmart, Dollar Tree, and Dollar General, the top 3 are all up on the year. Even Ulta, which they call that's in the middle, is up on the year, while the luxury have been hit a little bit. But they're saying that's changing going in to the Christmas season, which again is supposed to be somewhat muted compared to years past, right? Where everything has been amazing. People have more disposable income to spend. So we shall see. I'm not really excited about anybody in the space. We do have some exposure to mostly Costco and Target, right? Who exactly they're saying don't have exposure to. Mostly those are long-term holds that folks have that have huge tax gains, so they aren't selling. But we certainly aren't aggressively buying anybody in any name in the retail space going into the fourth quarter like we normally would.
Last, please explain how people can save money on taxes by doing a qualified charitable distribution from their traditional IRA.
Yeah, everybody wants to save on taxes, right? And there's honestly only a handful of ways to do it. And this applies to you if you're required to take a minimum distribution out of your retirement account. So again, but just by pure age, that's the 72 and above crowd now with the Secure Act. So, kind of the older folks that are, have made their retirement number, are in retirement, and now looking to just reduce their tax bill and give to charity at the same time. Or you might face this if you have an inherited IRA where you're actually receiving, have received that account, and then now you have 10 years to draw that down. Well, maybe you're in a high tax bracket to where you just want to, and you're giving to charity anyway. Well, now here's a way to do it tax efficiently, right? So I wouldn't necessarily, give to charity is obviously giving your money away versus just paying taxes on it and keeping the rest. But certainly this is a mechanism out there to encourage charitable giving. From the tax code, it used to be easy to write off charitable giving. Now it's a little bit harder, especially with the higher, I'm blanking on the word there, but the higher standard deduction that's out there. So it's a little more difficult. But if you have a traditional IRA and you're taking money out of it, here's how you do it. There's a form out there where instead of taking the RMD directly into your bank account and then giving it to charity, you can fill out a form for your required minimum distribution to go directly to the charity. And you fill out this form, and I'm a Schwab, so Schwab cuts the check, but all the custodians do it. Well, maybe not all, but most. And then you mail that check directly to the charity, so you, the individual, don't ever see the money. That's the important part. If you see it, then it's a distribution. If you send it directly from your IRA to the charity, then you can write all of it off. Has to be, RMDs are taxed at ordinary income rate. So again, the worst of all the brackets for tax purposes. So you take money right from there. You can only do up to 100,000 annually. So again, if you're bumping up against that limit, good for you. But there is a limit out there. It must be an approved charity. Most charities count, honestly. Individual politicians don't count, but a lot of the political groups that are out there, you can donate to. But basically, the custodian, in my case, it's Schwab, maintains a list of these. So you simply call them up or have your advisor look it up online to see if your charities qualify, and if they do, then you can do this. And then again, it can be any amount you want. So say you're looking at a $3,000 RMD for a year. It's like, okay, and you want to donate 1,500 of it to charity, you can do that, and then you simply take the other 1,500 as your required minimum distribution, and you would only owe taxes on the 1,500, not the whole amount. So you can really slice and dice this however you want. Who can use it? We talked about if you're taking an RMD, you can use it. Distributions, again, capped at 100,000. You have to make sure the charity qualifies. Comes right off the top. Let's see. Who should use it? The benefits, IRAs, yes. How do you report it? So here's how it's reported for the taxes: is you report the full distribution on the taxes, and you subtract out your from where you have the total distribution, the taxable distribution, and then that's when you enter the zero or make the adjustment and write QCD in next to it. If you're on TurboTax, there's a place to, it asks you, is any of the RMD qualified charitable distribution? You mark yes, and then you fill out the little deal where it says like, okay, I had 7 of them for $100, so that's $700 total, and then it does the math for you and puts it on your tax form. So overall, pretty slick way to reduce your taxes, not by a tremendous amount, but every little bit counts, especially the higher tax bracket that you're in, the more it's going to benefit you. So good question, Allison.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.